Welcome, everyone, to Name Confidential Live.
Thank you, Susan.
Thanks.
Welcome everybody to Name Confidential Live. Today on our show, we are joined by George Kailas, CEO of Prospero.ai, a platform at the forefront of combining AI and market sentiment analysis to guide portfolio strategy. George brings over 2 decades of experience in both finance and artificial intelligence, as well as his weekly investing newsletter is quickly becoming a go-to source for retail and professional investors navigating market uncertainty. We're excited to dive into how George interprets current market signals and how his models are shifting in response, and what lessons active managers can take away from this volatile environment. George, welcome to the show.
Thanks for having me on.
So in some of our pre-talks walking in here, I think we wanted to highlight a lot of bringing a huge amount of experience within artificial intelligence into market sentiment analysis. I figure what would be great is, why don't you introduce a little bit of your background in the firm, and it would be great to learn a little bit about how you look at quantitative edges and what roles, if any, do traditional signals play in your security selection or analysis indicators.
Yeah, so my background was first on the value investing side. Got my start here at Columbia University when I was still in high school. I worked for Bruce Greenwald, and then I worked in my first value fund when I was 17. I taught myself accounting to get that job, and I did various buy side things and things in mortgages. But a lot of what I do now is kind of combining value investing principles with kind of what I would call intelligent scale on the AI side. And I think that's kind of the benefit of where I am versus, a lot of other people are, because I've seen things as complex as evolving neural networks that, my first company built with NYU, kind of some of the shortcomings. And I've steered more towards kind of organizing principles and signals that help, that are backed by AI that kind of help the human make more informed decision. That's a real sweet spot for us. And we use a lot of different kinds of data to integrate for that. But I'd say what we do that's pretty unique is we're not trying to predict stocks. We're trying to build concepts like net option sentiment. That is, kind of our own version of compressing what is going on in the options markets into, or the short-term options markets into one number, and then scaling that within 2,000 stocks. And that can become pretty informative when you're looking at that number every day and seeing it change relative to other numbers, including ETFs like SPY and QQQ.
So for net option sentiment, I remember you discussing that you look at this in terms of a range of about 0 to 100. But before diving in the weeds, could you give us a 20,000-foot view of what net option sentiment is and how it applies to perhaps one or two names that you've looked at in the past?
Yeah, so net option sentiment is, a lot of it is what you might call intelligent skew, right? So we're looking at those price differences, but we're looking for it across, I would say, a lot of different short-term expirations. And one of the things that we're doing is we're trying to identify institutional trades and not just institutional trades. We don't really care about sweep orders because we view those as what the market wants you to know. We're looking for kind of more robotic signatures of what people are trying to hide in more of a methodical way. So that's a good portion of net option sentiment, but we're also looking at things like open interest, differentials, call put ratio, volume differences. But the bulk of it is kind of that intelligent skew. And yeah, I'll walk through a few really cool examples here, because I think when some people see our results, they are a little skeptical of how they could be so high. But these signals can really make things easy. And I'm actually going to highlight two examples where I saw the same pattern. And we're also going to look at upside here, upside breakout. It's looking at the long-term options markets. A lot of it is similar to net option sentiment, but we also layer in things like price targets, analyst ratings, price momentum factors. So it's a bit more complex looking in the longer term. But why I love this example is we basically see, before two major news events, announces this funding round and then the Alibaba reorg, we're basically seeing both signals really going up a lot before that happens and how we reacted to it. But what's very interesting here, and what I kind of highlighted, is we see this kind of net option sentiment and upside both going into the 90th percentile or above. And that is a big indicator to me when both of those go up together, which kind of transitions us to the next one. We have a lot of different like excellent case studies, but I picked AppLovin as well because we got in on that very similar setup as we did for Alibaba. And you know, when basically we're observing these, we're basically observing institutional patterns where both in the short and long-term options markets, the stock is sizing up very well relative to other stocks. And what I really like about this example was not only how early we got to AppLovin, but if you look at the net option sentiment line, before any of the subsequent move ups, you kind of see it hitting a higher high. You see it sloping up. So even though by the end, you're not talking about as big of a move, you're still seeing a move every time the stock kind of has a decent upswing. So yeah, I think a lot of the times, you know, what we're doing for retail investors, and I think professionals that use our signals alike, is we're really simplifying things. And the mindset that I really got in when I was building this was not only to build signals that would support my better decision making, but it's kind of modeled after what I thought were the best traders I knew growing up before we got like a lot of these like traders and you know, quant traders. But really the pure traders, they had a lot of math going on in their head and they couldn't always articulate exactly why they had certain intuitions or things like that, or maybe they just didn't want to share. But regardless, I was kind of trying to make a lot of that mental math of what I was doing when I was making decisions easier and kind of filling in gaps. So what I ultimately, and this is kind of what people say about AI as the next generation for it anyway, instead of it solving everything, basically just solving a lot of the easy things. So, you know, more complex thought could be done above that. And that's really how I built this system, to make sure I didn't have to worry about a lot of the lower level stuff, so people could worry about the higher level stuff like stock comparison on top of these metrics.
So I think as to if you don't mind bringing back up some of those charts, because I think there's a couple of things to dive in here too. So if we look at the first one for Baba, so let's first take a look at what these three lines mean. I think it's clear what the pink line means, right? Because the pink is just the like average daily, like the close, right?
Yeah.
And then we've got this dark green line and the light green line. And with the light green line, you have this defined as net option sentiment. We talked a little bit about what net option sentiment is and all of the inputs that go into that intelligent skew and picking up on robotic signatures. But upside breakout, I noticed that on the y-axis, both upside breakout and net option sentiment are in the same scale. Perhaps there's something I'm not understanding here. Could you sort of differentiate what net option sentiment and upside breakout mean?
Yeah, so all of our metrics are scaled 0 to 100. Net option sentiment is looking at you know, kind of a pure version of a more complex skew, right? Upside, and that's just in the shorter term options markets. Upside is looking at similar kind of smart skew in the long-term options markets, but also layering in things like analyst ratings, price targets, percent buy, you know, distance from average price target, and then price momentum factors. So upside is a little more complex, but the core of both of them is looking at the options markets. Upside is actually the main difference in the options markets is upside is looking more at call demand, and we also have a downside that's looking more at put demand versus net options that's, you know, netting them out. But yeah, that's kind of the details of them. And I mean, the only other thing that I think it's kind of important to say is when you see this kind of flat line at the top, that basically means this was the highest upside stock ETF of all of our 2,000 in our population.
So I guess what we're looking at here, and for the a bit of an introductory understanding of what these indicators are saying. So we have in November, the month of November, both two indicators of net option sentiment and upside breakout start both in the 90s to pretty much topping out at the top of your scale here at 100. And that looks like a leading indicator for this bounce that we saw at the end of December 29th, going to capture that big jump up from what it looks like it was somewhere in the just below 90 up to maybe 115.
Yeah. And what we kind of always say a little tongue in cheek is that, it looks like somebody knew about this event before it happened.
So then when you start seeing the divergence of net option sentiment and upside breakout, because it seems like that divergence happened right at the peak in this, as you've highlighted, exit in January 27th of 23. How do you look at when those two indicators start correlating with each other, and then when they start diverging? Do those things mean different things in your model or view of the world?
Yeah, I mean, that's the nice thing, as I said, is like the signals inform, me about what I want to do. They're not like there's no hard and fast rule. So I know what I was thinking at the time when I got out is that, it was kind of in an upward slope. And the day I got out, I definitely saw, net option sentiment hitting lower numbers than I'd seen before. And net option sentiment is going to be more sensitive because it's looking at the long-term options markets. Like you see, even in this whole graph, upside never really moved that much below 90 because, people had a lot more confidence in the long-term picture. But obviously, you see the short-term picture really changed before a pretty decent descent in price. So yeah, on this one, and that's why all of the indicators kind of have their own character. I really liked when I got in and I saw both of them, showing strength, especially when you're coming from, where this was before, which was, they were in the 70s, below the 70s, both of them. And then when a short period of time, them both getting to the 90s, that's a huge change for both of those numbers to change that much in a short amount of time. But then you can also see on the right, I even got out pretty early and it got a lot worse and got a lot lower in terms of net option sentiment. But, we see that all the time. Like I got out of Meta before it had a lot of its downslope for similar reasons. The upside breakout, still people had a lot of like long-term faith in it, but we had a lot of clarity that the short-term options markets weren't viewing it the same. And that's something that, is a lot harder to do if you're scouring options chains, or I'd say a lot of the time, if you're just looking at the put call ratio, you're not getting the same amount of information as you get when you kind of see this number rolled up and you're looking at more holistically at the short-term options markets.
Yeah, it's really well said, because I think when you're specifically talking about how longer term, and George, just how do you differentiate between long and short term in this context?
Short is 6 months or less, long term is 9 months or more.
Okay. So when you see that sort of divergence and you can say, okay, well, long-term prospects are staying constant, but it's the short-term ones that are triggering what would be this exit signal of the divergence of the two. I think it really well articulated. I appreciate that, George. And then so let's jump into AppLovin now that we've got some context here. Okay, so here for AppLovin, and just from looking at the graphs, it looks like neither of your signals really topped out at that 100 mark where we saw the BABA upside breakout and specifically upside breakout kind of top out at 100. You were saying that's universe dependent as well?
Sorry, did you say universe dependent?
Yes. You were saying that of all of the securities that you're measuring, that 100 would typically mean that it is relative to the universe that you're studying of the underlying securities.
Yeah, the best. Yeah, obviously. Yeah. But like something about this that is like we actually wrote a letter about was that we do have mechanisms that actually reward larger cap stocks more. Like one of the things we talk about is like kind of a pure difference between open interest, where we're just counting the raw number. So, 1.1 million calls versus 1 million puts is going to be graded higher than 100,000 calls and 50,000 puts. That's just one of the elements in ours. So that's just to say, when we looked at AppLovin, it was a 37 billion market cap company. So for it to actually look so strong in our signals, that's an indicator too. We're always like benchmarking relative to that because, that's one of the ways we try to like help manage risk for a lot of the retail investors that are using it. If we reward larger cap stocks that have kind of like what you might say is more raw money behind them, that is an important signal for us. So that's one of the things that's kind of important about this one is, yeah, it doesn't reach the top of the scale, but at the same time, when I saw like this kind of same ratio, 90 net option sentiment, 90 upside, I hadn't even heard of AppLovin, the company, at that point. So that's always a big thing for me where I'm like, wow, this is doing really well in our signals. This stock isn't even on my radar. That in of itself is a signal for me. So I wouldn't expect a company like AppLovin to get to 100 on either the scales. But yes, for a company of its size, it showed very, very strong metrics.
That makes a lot of sense. So do you have a floor of the market cap of the universe that you're looking at?
No, I mean, actually anything that has options traded can get into our system. So yeah, I've seen like $1 million market cap companies get in there. It can get pretty small.
Wow. Is there okay, wow, that's getting pretty exciting stuff. Sub $100 million market cap companies and the options exposure there. That's got to be an exciting area of the market. One I don't know enough about. So, all right. So then you have this net option sentiment runs up big before each big price move. Okay. So then you're looking at the slope of your light green line here.
Yeah. So absolutely. Like in all of these, you can kind of see in the first one, that's like a big move. This one is, a bit of a smaller one, but you kind of still see it go up, this one before this one. So it's just like, that's the thing where, if I'm looking at a stock thinking about, whether to add it, maybe add more of it or anything like that, the movement of net option sentiment is important. And you'll kind of see on the last one, you saw I got out of Alibaba, but AppLovin I was holding this whole time because it never got below 85. So it never really gave me an indication that I should get out. So yeah, this signal can really simplify things again. And there was a few times that I added multiple positions, even though my portfolio generally on the long side is never any bigger than 10, 15 stocks for my high conviction. So, doubling up is pretty significant. And yeah, a few times with AppLovin, I did it because I saw these increases when I was checking it.
So it seems like that the upside breakout indicator was less of a factor. And tell me if I'm misunderstanding. But within this example of AppLovin, the upside breakout was correlated pretty much all the way with your net option sentiment. So when we were looking at BABA, you talked a bit about how you had this divergence between, closer than 6 months and later than 6 months of giving you your exit signal when you saw short-term softening within the sub 6 month metric, but still had that bullishness for the longer than 6 month signal of your upside breakout. How did you see upside breakout and net option sentiment both influence your decisions here with AppLovin, or do you feel like it was more heavily weighted in net option sentiment of that signal influencing your decision here with AppLovin?
So they're giving me different important pieces of information. upside is my risk management metric, right? And that just for upside, it's pretty much just like if it's above a certain level, generally 80, certain stocks I want to see it above 90. But as long as that's there, I could be live on a bull pick. Net option sentiment is what tells me entries, exits, or like we were talking about, additional conviction or loading up more in my portfolio. And it's just a really good, there's stocks that look good all the time in net option sentiment, and that I do see move after I see that I don't touch because they're 50 or 60 upside. And that's just because I view upside as the floor, right? And when we include things like analyst ratings, price targets, that's helpful in assessing the floor, because I say, not only if our options metrics like it, but analysts like it too, I feel like there's only so much downside to it that way, and probably some upside if, say, the price targets are still above where it's trading and there's positive demand in the long-term options markets. So yeah, that's really like, and the thing is, if upside went down to 70 in this picture, would I get out? Sure, right? But the only time I've ever seen upside move substantially in a day was when we were looking at GameStop, and like one of the most recent runs. And pretty much the really funny thing is I think institutions knew that retail were watching short-term expirations so closely that basically they were exiting in the long-term options markets when that run was kind of over. But that's like the only exception. So that's why I'm even watching net option sentiment, because upside isn't going to move that much. And the fact is, if upside moved 5 points in a day, that wouldn't be all that meaningful. But say in this picture, right, it really matters. Like in this picture, like let's say, you're kind of looking at the November 12th date where AppLovin started to go down. If it, say, went down to 79 versus like the 85 it's at, that would be an exit for me. Versus, the upside going down from even, 95 to 90 or any of these like 85 to 80. If the net option sentiment looked good, that wouldn't necessarily be an exit for me.
Yeah, it's still getting a B. I mean, that's my motto. C's get degrees. A little bit of a little lighthearted here. So what I really like about how you've differentiated upside breakout and net option sentiment is in the way that you were referring to upside breakout being the risk management in longer term outlooks, being able to say, oh, whether or not I'm going to really get out of this name or this holding over a longer period of time, with net option sentiment being your conviction or your exit and entry price, or being able to double up or perhaps reduce exposure on a more tactical or short-term basis. I think it's really well said. So with that in mind, and perhaps that's an oversimplification, George, but with that in mind, I know in our intro here, before we came on, you were mentioning on another podcast you were doing today, and obviously thank you for your time. I know you're a busy guy. Is talking about Tesla and some of the early moves in Tesla. So if we had Tesla's chart on here, what's the upside breakout and what's the net option test sentiment of Tesla doing today?
So I've actually seen the upside breakout looking pretty strong at 100. So I think people are really starting to see long-term value at these prices. Net option sentiment is at 94, but it's looking pretty volatile, right? There's been, on this chart, it's hit lows of 68, 73, 79, like all in the last 2 weeks. And then it's topped out at 98 once, closed at 94 today. So it's going in a wide range. And that is typically something that I stay away from. I like to see actually more settled net option sentiment graphs. So yeah, there's actually there's a historical Tesla one. Do you want to take a look at that?
Sure. Yeah. If you have something you
Not
want to
current.
fire up.
Yeah, like because there's actually a good thing in I'm gonna reshare my screen when I find it. That uh
And thank you for going off script a little bit here. It's
no,
really
I
interesting to
actually
see.
like I think this is a really important thing for Tesla. Um because I will locate it. There we go. Because the net option sentiment volatility is one of the things that I traditionally don't like about it. Like actually in this example, Tesla was one of our, when we were first starting up our newsletter, one of our biggest, winners. And oh, this is supposed to say 23. But yeah, you can see it kind of down here. And before I got into it here, you could kind of see net option sentiment 40, 50, 60, just like running around. But then before these runs on this one, you actually see net option sentiment flatlining at 100. And
Wow.
that's way harder to do because net
Right.
option sentiment is the more volatile metric. And
Right.
this is kind of the reverse of the other one. This actually kind of shows what I was talking about, where I actually did get out of Tesla because it was fixed at 100 and then it started showing more volatility. And then also during that time, upside started to go down too. And you can see kind of that decline. But yeah, like right here at the beginning, you can see that volatility. And that's typical of Tesla when it doesn't have good price action. I've gotten to know it very well because I'm always like kind of looking at it.
Mhm.
But when I kind of see it like stabilize like this, like on the whole, Tesla probably has the highest net option sentiment of on a day out day basis of any stock since we've been doing it. So I expect it to be higher. I expect it to be stable. But as you can see here, for like basically two of the bigger runs I've seen for it, it's had very stable net option sentiment above 90. So if I'm seeing it hit like 68 in any kind of recent period, I'm not feeling good about it.
Yeah, I mean, you mentioned that with upside breakout, there's a bit of skew for the market cap. I imagine there's the same skew for net option sentiment as well in terms of market cap. So if Tesla's one of the larger market cap companies you're looking at, you might be more sensitive if it crosses over that 80 line or starts showing some suffering than it would be if it was a smaller market cap underlying holding. Is that safe to say for both of these metrics?
Yeah, and that's actually one of the ways that our metrics work. Like one of the ways we use AI is it it's looking at market level predictions and using that to figure out weights for things like net option sentiment, right? So
Okay.
it's actually going like depending on the day, it's going to be a little different. But yes, there's a component of it that is going to allocate towards you know, the largest stocks. But I will be right back. My camera is acting up today.
Yeah, really interesting.
I'm back.
Hey, thanks, George. So one of the things you mentioned about sort of optimizing towards market cap and within your signals, would it be safe to say that you're leaning a little bit more on your ML background that are generating this optimization?
Yeah. I mean, I think the way that I view systems, after I actually found out my big like science machine that I built to like auto, like evolving neural networks, auto optimize, hyperparameters and feature set building and things like that, what I realized was that it's not good, especially for markets, things predicting the markets, to not understand the foundation, right? Because if you don't understand exactly what the foundation's doing, then you can't debug it if markets are moving fast or anything like that. So the system is really built to have logic systems on the bottom that if anything's changing, anything's failing, I could kind of know exactly what parts of it aren't working. And then using scale on like those kinds of things, on like, weights, because what I don't know in any given day, in real time are things like, what kind of market cap adjustments needs to do to the weights or sectors, or like if I'm having to pull all those levers, that's way too much work. But if all of the formulas on the bottom make sense to me, those are constant, and then just how they're applied can be malleable is what I've found to be the most successful.
So what that leads me to think here, we were looking at so you think about, we have a lot of things that have changed within transformers and the way sort of mass market understands the adoption of AI for being able to use of chat. We have more legacy systems, which I find to be very compelling in traditional finance, advancements within machine learning, partially because I feel like they're more quantitatively accurate. And I don't mean to impose my own biases on future of AI and asset management for this conversation. But with that being said, how do you see, AI's role in risk management or adoption going forward?
I mean, I think the biggest thing that is holding it back is probably compliance, right? I think and it's going to happen, right? I think enough people are going to want AI to be like, managing all this stuff, but, obviously there's approvals and things like that. So, I mean, I don't think that's been fully figured out yet, but I think once that has been, AI is gonna eat a lot of this stuff, because if you're talking about, especially if you're talking about like risk management systems, like the only thing, we've kind of seen that time and time again. Whatever we think the proper reserves are, or, you look at Silicon Valley Bank, all that, time and time again, we see structural checks failing, right? So I think, when you look at something like that, essentially like, what it looks like, what I've heard is that basically, counterparty risk is what ended up blowing that up, because I think, other banks that basically were assessing the assets better than they were did that, right? So that's an automated system. So really what would be the best thing for risk management is if some of those systems were fully automated, and whatever was figuring out that Silicon Valley Bank had a risky balance sheet on the other side could be deployed or required to have kind of some more universal testing. And that's where robotics that were like, say, marking things to market accurately would be highly beneficial. But we haven't figured out how to do that yet.
Yeah, and then there's also more and more incentives to have silos of data, to have proprietary data, to gain value base of proprietary data. So the idea of being able to look at counterparty risk as a general availability of information is something that I think is an aggressive way of looking at the world, because most people are prize privacy and prize proprietary data sets than having their data available to be scrutinized and then see, hey, where there might be junk on the balance sheet or where there might be hidden counterparty risk, because there's an incentive to hide or there's an incentive to keep private. So that's a challenge with that framework, which I think extends outside of compliance. I think it's well said that it's a compliance issue But I think there's also shareholder and stakeholdership that prizes privacy of those data sets that would ultimately uncover weakness. So we'd be looking at more regulatory heavy regimes that would require disclosure to be able to get there. But we're not seeing a lot of that here in the US markets. Perhaps another thing Europe will be a thought leader in. Well, with that spiel, I think, George, do you happen to have a quote or anything or any words of wisdom to be able to send us out with? We always like to end on a nugget of wisdom.
Oh, I was supposed to get a quote and I forgot to get a quote, but let's see let's see if I can do it.
People have quoted themselves, which is perfectly fine.
I mean, I'm like, yeah, I don't have like a quote that comes to mind, so I might have to quote myself. I'm drawing a blank. This is my fault.
Yeah, that's all right.
I was told about this and I didn't come prepared, so I apologize.
Well, I think that in any case, we do have an opportunity to be able to use your insights in your newsletters in a way to, I think, it's definitely difficult for somebody who's not as entrenched in this segment of signals to properly judge the market cap weighted aspect of your signals. Because I think for somebody who's coming in who knows perhaps very little, is saying, oh, okay, well, there's a conditional aspect where in some cases 70 is going to represent a buy for upside and for not net options. In some cases, it's going to be 90. In some cases, it needs to really top out at 100. What kind of advice can you give to somebody who's not sure how to judge or digest the volume weighted or the market cap weighted nature of some of your indicators?
What I say to anyone that doesn't quite know how to grapple is like, just look at, either stocks that you follow or stocks that you're thinking of buying at the time of purchase, and then just start to log it over the course, like, because it's all relative. But, especially in that option sentiment, I think if you're starting to, check that and ingrain that in your process, I've had no one come back and tell me that wasn't a useful data point to look at. And I got a quote. Can I still do it? Are we over it?
Absolutely, man. This is what we're going for.
Yeah. So it's kind of funny because I don't think of this as a finance quote, but one of my favorite books that I started was like Fooled by Randomness. I know a lot of people love it, and like one of my favorite quotes that is like for life is from My Back Pages, Bob Dylan, and it's I was so much older then, I'm younger than that now. And I feel like that's a different way to put the Fooled by Randomness thing. And I kind of like, it's funny, I had a long history in, equities, AI, everything like that, but I didn't actually start making picks officially until like about 2.5, 3 years ago. And a lot of that was that mindset. And I'm doing very well, I think, with that mindset, because I was kind of applying that where it's just like so much drilling myself of like, no, like you can't, you're not ready yet. There's a lot of smart people out there. You better be sure if you do this that you're going to be right. And I think that ended up serving me very well. I spent a lot of years honing my practice, discipline, as well as, just the metrics and the process that I go through to select things. And I think, that mindset was very helpful to me. And I think that could always be helpful to everyone, like assuming you don't know enough versus assuming that you know everything.
Extremely, extremely well said. A lesson that can really only be learned with experience.
Yeah.
Thank you so much for being on our show today. Thank you everybody for tuning in. I would be remiss if I didn't nudge again for our upcoming conference in Costa Mesa, California on May 5th through 7th. That's Uncommon Knowledge. Come and check it out. Thank you, everybody.